on Bitcoin, how ETF funds and macro trends are reshaping the market. The speaker is André Dragosch. He's the director and head of research for Bitwise Europe, a leading Bitcoin and digital asset investment firm. He is a respected analyst who delivers in-depth market research, macroeconomic insights, and institutional Bitcoin adoption forecasts, frequently appearing in media and conferences. And of course, I've said before, Bitwise is one of my favorite companies, as they are a wonderful partner of Kraken's. So please give a warm welcome to André.
Thank you. Yes, thank you so much, Tracy. Very warm welcome from my side. So I'll be talking about institutional adoption and how Bitcoin ETFs, but institutional demand in general, has reshaped the market. And I think in order to describe where we are right now in terms of institutional adoption, there's a very fitting quote by Winston Churchill, which is referenced by my colleague Teddy Fusaro quite often. It's saying, this is not the end. This is also not the beginning of the end, but it's probably the end of the beginning. And I'll show a couple of slides that actually imply that 2024 was essentially the end of the beginning, and we closed an old chapter for Bitcoin, right? But we open up the new one. Yeah, let's start with the presentation. Disclaimer at the beginning, but let's talk about Bitwise. So, who's Bitwise? Bitwise has been founded in 2017, so we've been around for almost 10 years. It's been founded by Hunter Hosley and Hong Kim. They were university buddies and decided to open up a crypto ETP provider. So we're offering Bitcoin ETPs in Europe. We're also offering Bitcoin ETFs in the US. We manage around $11 billion in client assets across ETPs, but also other businesses like staking. We do a lot of institutional staking. I work alongside 200 other colleagues that mostly work remotely, but we do have offices in San Francisco, New York, and London, so we're quite a global company. We're also very proud of our backers. I mean, Stanley Druckenmiller needs no introduction. He's one of our advisors, also early investors, as well as Kevin Walsh. He's the nominee for the next Fed chair. It's not yet confirmed, but yeah, he's also one of our advisors and helping with the business. 2024. Yeah, what happened in 2024? Spain won the European Championship, right, against England in the finals. But there was another important event in 2024, which is the US Bitcoin ETF launch, right? So in January 2024, 9 ETFs launched in the US. And you can clearly see that starting in 2024, the adoption of Bitcoin essentially accelerated from the institutional side. There was another important event, which is Trump won the US election, right, in November 2024. And because he made so many promises with respect to the Bitcoin industry, but also crypto industry more broadly, you can also see like that this was a big catalyst for the industry. On the left-hand side, it's probably one of the most talked about charts, right? Bitcoin holdings by BlackRock's IBIT Bitcoin Trust and Strategies MSCR Bitcoin holdings. And before 2024, growth in like both of these holdings, they were like mediocre, right? They were growing, but not that much, right? And when 2024 came, you could clearly see first you saw takeoff in IBIT Bitcoin holdings, right? With the ETF launch, of course. And then later in the year, MSCR holdings also took off. They essentially doubled their holdings, almost doubled their holdings in 2024. And if you look at the right-hand side chart, you can see all institutional holdings by both Bitcoin ETPs and treasury companies worldwide, including Strategy, including IBIT, including our Bitwise Bitcoin ETF, right? So we were close to slightly below 5% before 2024. And now we're close to 13%, right? So 13% of Bitcoin supply is already held by an institution, right? So every 8th Bitcoin on the planet is controlled by an institution. We can talk about whether this is a good thing, but the beauty about Bitcoin is that you can't really control the protocol with the supply, right? And it's a good thing, right? Unlike proof of stake or other protocols. So institutional adoption was a net positive because it was essentially an on-ramp to accelerate adoption in general. I had a conversation yesterday with Ed Julien. He's one of the co-organizers of the conference. And he asked like a legitimate question. He asked like, what are we doing essentially for the space? What's our contribution, right? Where do we add value? And what problems do we solve, right? And one of the problems that has been solved by institutional adoption, but also ETFs in particular, was it mitigated the fee pressure, right? Because before 2024, there were spikes in fees because the network was congested, right? And with the ETF launch, a lot of transactions actually moved away from the blockchain towards these ETFs, right? It mitigated the fee pressure, and now we haven't seen this problem ever since, right? Fees have been very low. So there's been like a clear influence of these ETFs on on-chain metrics as well. And for the first time in history, since 2024, you see actually more transactions in these securities, Bitcoin ETFs, Bitcoin ETPs, than on-chain, right? So a lot of transaction volume has moved off-chain, has moved into these ETFs, but the majority of volume in terms of like dollar volume is still moved on-chain. You can see it on the right-hand side. Still, the bulk of the big money is still moving on-chain, right? But rather the smaller kind of transactions, they moved off-chain into ETFs. And therefore, it's not surprising that actually there's an increasing share of the performance in Bitcoin that's actually explained by these changes in ETP flows, right? And you can see on the right-hand side, really took off in 2024, right? With the launch of the US ETFs. And since then, for every percentage flow, Bitcoin's performance has become more sensitive, right, to these flows. And you can see it on the right-hand side. There's like a steeper curve since 2024, again. And there's something that is called spot volume delta, right? So there's an influence of the Bitcoin ETP flows on spot volume delta. Spot volume delta is essentially the balance between demand and supply on exchanges, native crypto exchanges. And what we saw after 2024 is that the flows in ETPs, in Bitcoin ETPs, have explained an increasing share of this kind of balance between supply and demand on exchange, right, on crypto exchanges. And the reason is they're actually soaking up so much supply on exchange that they're creating this kind of supply deficit on exchange, which is influencing prices, right? And you've seen on the right-hand side, exchange supply, especially since 2024, has come down quite significantly because institutions move coins off exchange, right? They move it to a custodian and into cold storage. Yeah, we talk about this institutional bit, right? But what does it actually mean? Yeah, we talk about Sailor's buying, BlackRock's buying, right? But the truth is, you can actually see it in the numbers, and it's quite significant, right? So starting with the chart on the left-hand side, it shows institutional demand in green by Bitcoin ETPs and treasury companies, right? So including IBIT, including strategy, all kinds of institutions. And the blue bar is actually new supply, right? And this year alone, institutions bought around 200,000 Bitcoins already, right? While the new supply that has been produced via mining was around 55. So they bought around 4 times the new supply, right? So they're creating this kind of demand overhang / supply deficit, which all else equal, right, prices have to rise to equilibrate this, right? And what's also interesting, for the first time in history, is institutional demand actually accounted for all positive inflows, on-chain inflows into Bitcoin this year, right? You can see it on the right-hand side. On-chain capital flows were actually negative because we were in a bear market, right? Short-term holders were selling, retail was selling. But the institutional bit was quite positive, right? It stayed positive, didn't decline. And against around 20,000 Bitcoins that was sold on chain, right, there were 90,000 Bitcoins being bought by institutions, right? So they accounted for all of the positive inflows. And this was actually felt in the market, which stabilized the market, right? And it's become a dominant force. And actually, most of the price action nowadays, if you look at the change in institutional demand, right, inflows and outflows into Bitcoin ETPs and buying by strategy and other strategy companies, the change of this institutional demand is one of the most dominant forces in the market right now. You can see it on the left-hand side. This is the change in Bitcoin buying by these institutions and the price, right? And you could argue that the most recent recovery, right, was actually induced by an acceleration in institutional demand, which happened around March, right? And you can see on the right-hand side, it's mostly been treasury company buying, right, but also ETP buying, but it's more than new supply, right? Yeah, so this is like the breakdown. Left-hand side, treasury company buying this year, new supply, right, in blue. On the right-hand side, Bitcoin ETP buying, new supply. And to be honest, treasury companies, especially MSCR, they've done the heavy lifting this year, right? They bought around two-thirds of institutional demand was due to treasury MSCR buying, right? Strategy buying. They bought more than the new supply. And so this is creating this kind of demand overhang, supply deficit. And with institutional adoption, what has happened is Bitcoin has become this kind of macro asset, right? We talk about this all the time, right? Bitcoin's a macro asset, it's been influenced by global developments and so on, but you can actually quantify it, right? There are ways to quantify it. And the truth is, you can explain around 80% of Bitcoin's performance, more than 80% of Bitcoin's performance, via changes in macro factors. Very boring macro factors like global growth expectations, monetary policy, US dollar, Eurozone risks, right? And this year in particular was mostly influenced by global growth expectations, right, the performance. Because we had the supply shock, right, we had financial conditions tightening, oil price shock, and so on. And this is being reflected in the price of Bitcoin. So the good news is, so we're seeing this kind of institutional adoption, but we're still early, right? We hear this all the time, oh, we're still early and so on, but it's actually true, right? If you look at the supply composition on the right-hand side, starting with the right-hand side, you can see that individuals, so non-institutional holders, they still make up around half of the supply ownership, right? Close to 50% is held still by individuals, right? And all is unaccounted for. And this doesn't even account for lost coins. Lost coins are extra, right? Satoshi coins, where people lost their keys and so on. And so if you look at institutional ownership, we talked about the statistic, 13% is owned by Bitcoin treasury companies and Bitcoin ETPs, right? So you have 13%, which is accelerating fast, right? And around 15% still held by institutions, right? And how does the supply actually move from these individuals to the institutions? Only by higher prices, right? That's one of the key investment cases also for Bitcoin in terms of institutional adoption. And if you look at the left-hand side, 2026, you can see this change in supply. And it's a story as old as time, right? Institutions, they've continued buying, right, despite the bear market, while individuals and miners, they were selling, right? Selling most of their supply into Bitcoin treasury companies and Bitcoin ETPs. But yeah, it's still quite early. And yeah, we talked about this kind of adoption, but I mean, the potential for Bitcoin adoption is quite high because it's not only this shift from individuals to institutions, right? It's also adoption by institutions in general, right? The allocation in Europe, for instance. In Europe, Bitcoin ETPs account for maybe 1% of the total AUM, all assets under management. The UCITS market The regulated fund industry is like 11, 12 trillion euros in Europe, right? In the US, it's very similar. The ETF market is around $10 billion, right, including equities, fixed income, commodities. While Bitcoin ETFs are like 200 billion, right? 10 trillion versus 200 billion. It's around slightly more than 1%, right? But most studies, they actually imply, okay, yeah, the optimal allocation is probably closer to 5%, right? So these institutions, they will move closer to these 5%. And as volatility of Bitcoin drops, right, because of more adoption, they will increase their allocation even more, right? Plus, we haven't talked about pension funds, right, 401ks. 401ks in the US are like 12 trillion, right? There's a huge pool of capital that's also already tapping into it, right? And yeah, I think institutional adoption is still in its infancy. And to come back to that quote, right, this is not the end, this is also not the beginning of the end, this is the end of the beginning. We're quite early and on this journey, and there's still lots of potential. Yeah, thank you very much for your attention. Muchas gracias.